Good morning, traders and investors. Thank you for tuning in to Pre-Market Prep, the best place each morning to get your trading ideas, your overnight news, some of your breaking news, and a whole lot of really good education. Today is Wednesday, February 5th, 2025. Seeing some mega selling pressure here today in the U.S. stock market. Earnings parade is ongoing. The guys are going to talk about the in crowd and the out crowd. It seems like you got to be in with your earnings for the stocks to go higher. Stocks that are in the out crowd, even though they might be having a good report, shares seem to be going down here in this environment. We got both AMD and Google reporting their results. Shares are down. We're also going to talk Disney, Chipotle, Snap, Uber, some earnings tonight out of ARM, Ford, and Qualcomm at 8:35 a.m. It's Wedbush Wednesdays, ladies and gentlemen. Jay Kornreich, he's Vice President, Equity Research in the REIT space. We're going to be talking some gaming and REITs with Jay. Let's run that intro and get over to the show, ladies and gentlemen.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Starting out in the red after a decent day yesterday. Down 25.5 handles here, 60, 36.50. The buck in the red after that torrid move, down for the third day in a row, down 46 cents, 107.35. TLT perking up near that 50-day moving average, up 65 cents, 89.08. Crude flat, 77.55. GLD busting out, up 231 to 264.81. Silver back over 28, back over 29, up 28 cents at 29.50. And Bitcoin lingering under 100K, down to $455 on this Wednesday morning. I'm gonna add Triple D. I'm gonna try Triple D and Z. How's that for a nickname for Christian? Z.
I
Did
see.
anyone know?
I have no idea what you're even thinking on here.
Because it rhymes.
Morning, guys.
Hertz, because his name ends in Z, and it's called Zed in Canada, by the way. I don't know, man.
No?
I think CF. I've went with CF for a long time. Joel tries to re-nickname people. I think he's struggling with this one. I think just go with the obvious. CF, how was your night?
Good morning, guys. Well, I don't know. It seems like a lot of not great earnings reports this morning and last night. A couple good ones, but I don't know. It doesn't seem like the market's hanging in there very well, I think, for some shoddy earnings reports. So that's my night. I see you got your double messy hair today, so that tells me you probably had a good trading night.
I need a haircut. Look at this. It's like a mop. It's crazy, man.
And I see Michigan. We're representing Michigan this morning too. So
big game tonight. Oregon. They come over to the Big Ten. They were 15-0 in the Big Ten, and they've lost 5 of their games in the Big Ten. Big Michigan game tonight. Going with Dana and Lisa. So I gotta get a little. Haven't worn Michigan swag in a while. But before we go to the Google report, how do you feel about the overall market? Technically, Dennis, I mean, I think I see resistance. I know where resistance is. I'm just not sure where really good support is.
Yeah, I think we're still just in the fade trade. I mean, that's the only thing I got right in my acronym is the fade and the actual word. I should have just not put any stocks in there at all because I knew I was like not feeling the stocks for this year. They're all crappy now. I guess Etsy's flat, but they're all crappy now, but the fade trade continues to perform. It's why my January was still pretty decent, despite my stock picking not being that great, just because I'm fading moves. So up and down, that's what we're doing here. Just
we could give you the theme.
Sell rips and buy dips.
We could say that we gave you the theme. Like that's a theme. So far, you hit the nail on the head. The theme is fade.
I hit the nail on the head of the theme. Stock picks more to be desired, but I've hit the nail on the head with the theme here. I don't know. We're in the middle of the range here, $5.99. We dip a little bit. Does the dip get bought? Probably. But you got, so many headlines coming. Fed's Barkin is talking right now. He says many Trump policies are adding to the uncertainty in the economy. I mean, so you got Fed speak happening. You've got, obviously, you never know what Trump's going to say. Apparently, they're taking over the Gaza Strip now. So, I mean, you never know what the next headline is coming from Trump. You got news out of China, and they're blocking mail and doing stuff. I mean, there's so many headlines here. Christian, how do you approach this market, which is so headline driven? Before we get into Google, just a general question. When you get into these headline markets, do you just ignore it all and just let the technicals lead the way? Do you pay attention? How's the CF trading look in a headline driven environment?
You make adjustments. I mean, you have to understand that the headlines that, when you haven't had a headline in 5 hours, you kind of you start to like, you start to like head on a swivel, like, well, what's coming next? And I think everybody's doing that at this point and saying, hey, it's too quiet right now. What do I have to watch out for next? But I think too that that home, was yesterday's theme, but I think it's today's theme as well. Yesterday had a real nice day. There was good participation in the market yesterday. Breadth was very good, but it's just one day. And it just seems like we're getting up to like a little bit of previous resistance and we're not able to get through it. So you just really have to be what I keep trying to hone in and tell myself too, especially like for the first 15 minutes of the day where some stocks are really starting to move. You can't really chase this. I know that you guys are both fans of like, don't chase, but you really have to be like, if you're going to play the game where you're going to get involved in the first 15 minutes of the day, I think you really have to tone down your size because there's a lot of fake outs where things look great in the first hour and then they just kind of your word, they fade a bit. So you really just have to be cognizant of where you're getting involved in names and being picky and choosy in this market.
Yeah, just real quick on a technical note, I just want the matching highs right here, the last two sessions, right? Right at the 69 level, and then we had two lows right in that area too. So that's why I said the resistance is much better defined than the support here. Maybe working on an inside day to day. Let's go to the Googster. Beats on EPS 215 versus 12. That doesn't make a difference because they missed on revenues and not a huge miss, but a miss nonetheless. Google services increased 10%, cloud revenues increased 10%. But when you're trading at all time highs, you got to beat, and raise. And they had a mixed report. What do you do with the Googster now after the false breakout?
I think you gotta separate what we were doing yesterday, the in crowd and the out crowd. And there are clear stocks that are on the out. Google is probably in the in crowd. I mean, the stock was at an all-time high yesterday. Buying dips on stocks in the in crowd has been a good play. You do have great support on Google at 188 to 189. So if you wanted and so inclined to come in here and buy the dip, lots of support here. I mean, again, trading is all about setups and having contingency plan when it goes wrong. So if I was coming in and buying the dip at 193, and I don't know if I'm necessarily doing that or not. I tried to do it a couple times last night, but it just wasn't rallying. I thought it might bounce back. I bought it multiple times, and then it just wasn't moving. So I've scratched those trades overall because it just hasn't come out of here. But I think if you got a longer term look here, I think as long as you're above 188. You maybe take a shot buying the dip and say, hey, this is an in-crowd stock. This is, maybe, a place. But again, if it takes out that 188, then you got to say, okay, so I'm risking 5 points trying to say maybe the stock can bounce back. If it doesn't give you immediate gratification, like opens at 193 and starts tanking on you, then you're probably on the wrong side of the trade. So there's a setup here to buy the dip, but I'd have a tight stop. Christian, what are your thoughts on the Googster?
Next. No, this
next. This is next.
This is disappointing because the chart and the breakout was looking very good, and it just felt like it was too good to see this breakout. And I'm also looking at Amazon. Amazon's going to be very interesting next week too. But yeah, I mean, it looked too good to be true, and it just kind of shows you that the chart can kind of help, but not so much when you have an event or when you have earnings. And I like what you said. I think I'll even go a step further with the Mag 7, with basically saying that some are going to be in the outhouse. And I don't know what you do with Google here. I think that if you really want to be a trader in Google, then you just gotta you can't same thing. You can't chase this name because they didn't have good enough earnings. I think they're kind of I was listening to Gene Munster, and he does a nice earnings recap, and he was saying that there are some positives in the call, and he doesn't think the stock should be down as much as it is, but they've got a lot of troubles. Like they're going to have to reinvent their search. The cloud didn't get not as strong as it should be, but there are some strong things in the quarter, but it's another one that's too difficult. I'd rather trade something that's not when you got to go through 3 or 4 of these points. We're like, it's not that bad. Just find another stock. Like for me, it's just okay. I'll find a name that's hitting on all cylinders. So I need
sometimes
a bigger
these things bounce back, on the conference call, and sometimes they bounce back, overnight action. That did not happen last night. Like I tried multiple times. I bought this 3 or 4 times, thinking I think it's going to bounce. I think it's going to bounce. And then it just didn't, and we're kind of in the same spot. I mean, you can see the charts. We went down this 193 to 195 area, and we just hung out there all night. So, I mean, we didn't have the bounce yet. Sometimes, you see this action, like Meta. Meta bounced immediately, Christian. Like there's certain ones. So maybe the fact that it hasn't bounced here overnight is already a tell. So I think I'm going to move my action with you. There is a setup. You could try to buy the dip. But are they really going to come in after? I mean, they didn't come in last night. Volume is still 1 million shares already today. I probably take a pass on this one too. I think you got it right when you said pass.
Dennis,
Sorry,
I like a few of your levels. 188. That just the pre-market low happened. 189 is your pre-market low, and then you have the old 50-day moving average right here. So let's see, you're still $3 away from that. So I would say for Google investors, if you find a bid, this far above the 50-day moving average, you hold the pre-market low, you put another low in there tomorrow, I think you bounce right back. I don't know if you get a gap fill. The other concerning thing, though, if they really take this out to the woodshed, is this gap down here, and that's way down. Gap fill would be 178.04. And the reason for that gap, and I was doing the research on it, was just an unveiling of a new quantum computing chip with breakup capabilities. That was that big gap here in this area. So let's hold the 50-day. We don't hold the 50-day, then I say you get a look at Google near that gap fill 178 to 180. So there's
you
the
wanted to add
Googster.
something. I want to see what Christian wanted to say.
Oh, I made a mistake. Amazon is not next week. I think it's Thursday after the close, right?
Yeah, it's Thursday. One thing before we leave the Google report, they did talk about spending, and AVGO appears to be the beneficiary of that. So it's funny, there's certain stocks that can move off reports. Quantum didn't get a lot of love in the commentary, which is why, the quantum stocks aren't moving. But AVGO did pop up on Google commentary here. That stock's trading up significantly here this morning. So AVGO, capital spending going to be higher there from Alphabet, from one of their biggest customers. Christian, actually, it's 9%. Christian was telling me 9% of the firm's sales. So that's why AVGO, if you're wondering this morning why AVGO is higher, it's off Google commentary.
Were you quick enough to get any of that, or did the algos beat you to it?
You're going to sit here, Joel, and listen to all these calls. I mean, that's where we're at too. I mean, it's nice to say, oh man, yeah, you're going to sit here, but you gotta, it's opportunity cost as well. Like you sit there and listen to this conference call. Like I used to do that. Okay, folks, here's, we're going on a tangent here. I used to sit there and listen to all these big calls. And then I realized for every 20, it takes 20 calls before you get a trade off of one. I'm not joking. Like it's very, very difficult. And the algos are so fast. Like you've got to be like, boom, on it. You've got to almost like be anticipating the next word coming out of the mouth. Because when they say, although, or, I've said this before, you're in a conference call and they're talking, yeah, this is good. Everybody, my wife used to work at the bank and they used to teach you this. And I'm not, they used to teach you the shit sandwich. When you have an employee that, is, struggling with something, you always say something good Then you give them what they're struggling with, them the shit, and then you finish with something good. So they all start on the conference calls with the shit sandwich. They all know it's corporate. They start with something good. They talk about what went well. And then if they're going to deliver something, then it's going to be like a but, or like, yeah, we really, had a great quarter. But once they say but, the algos are already hitting. They're not even waiting for what it is. They've already hit on that word. I'm not joking. So it's very difficult to get, off these conference calls. The algos are on it, man. They're really good at it. So for me, I just don't listen to conference calls anymore because I feel like it's mostly a waste of time. You will get the odd trade off it, but you're going to work really hard to find that odd trade.
Okay. AMD, Dennis. I know this is a tough one. 109 versus 108. That's okay. Sales beat 766 versus 753. Oh boy, nice pop. You were feeling good. And when it went to 126, but the commentary, when you're out, Dennis. And AMD down 11 sticks.
It's on the out crowd. Christian, you got this right yesterday. You talked about it. Stock is clearly in a downtrend, clearly unfavored. We're at a point here where it's exactly that simple. There's stocks that are in and stocks that are out. We talked about it yesterday. Unfortunately, AMD is one of the stocks that is in the out crowd. So it gets a pop. The earnings were fine. Gets a 6-point pop. And I was even saying to myself, I'm like, is it going to hold? Because it's in such, and I actually considered selling some of it into the strength. I did not, which was a big mistake, but it crossed my mind because I'm like, this is just, not, a stock that's just not holding gains. And I mean, this is where we're at. The stocks that are in, stocks that are out. I believe in Lisa Sue. I think there's a turnaround here eventually, but it is not coming imminently here. If you're in it for a trade, when stocks are making new lows, you got to go. So my average cost basis, I think, is like 118 or 119. I think at this point in time, if you have that on for a trade, I think you got to say, look, the imminent turnaround is not coming anytime soon. The quarter was okay, but not good enough. I mean, they're waiting to see that ramp up, and we're just not seeing it, just not coming. Business is just not coming from NVIDIA and going over to AMD. We're not seeing that. So at this point in time, you probably got to say, I got it wrong. And, am I going to sell some of it today? Maybe. Probably not. I mean, this is why you're diversified too. It's about 2% of my long-term portfolio. I'm down now $10 and I've taken a huge winner to a loser, which is terrible by me. I wish I could be right 100% of the time, but if that was the case, I'd have all the money in the world. I think on this AMD story, I'm being proven that I'm wrong.
Big pop, big drop. What are the lows of the move down here? I see 3 lows in the same area at the 112 area. Maybe set your alert button that if you get back above 112 and a half, 113, boom, maybe find support, build a little base. But right now, that old support is going to be acting as new resistance. I mean, I don't know what the expected move was. But I mean, hitting this thing down $10, $11.5, $12, boy, it's AMD. It'll have some kind of rally today. I just don't know from what level. Christian, you passed on this one yesterday. You gonna pass again?
Well,
he didn't pass. He was bearish and he was right.
Okay.
Well, here's some commentary too, because I know that you said that the numbers were good. AMD's data center business will grow by a percentage in the strong double digits this year, but the outlook was disappointing. So that's what it's all about, guys. For the earnings is not what they did for the last quarter, but what they're looking for in the next quarter and what their guidance, what their outlook is. The company's fourth quarter revenue topped estimates, but its data centers division revenue of 3.86 billion was below analyst projections of 4.09. When you hear below, that's also not good. AMD predicts strong double-digit percentage revenue and EPS growth year over year for 2025, with better products expected to be released. But my point was that, it's important to pay attention to these names that have underperformed because they can turn it with a strong earnings, with an outlook guidance, a new product, something like that. But you didn't hear it from AMD, and I can't believe that the initial move versus, where it was trading pre-market to where it is now. So
it was up $7 or $8 on the initial report. And it's like, oh, finally, a good report here. And then they just started leaking, and then they started hitting. Christian, you got it absolutely right. It's not what you did for me, it's what you're going to do for me. And the guy just wasn't good enough here. So, I mean, this is a very impatient market. It's a very impatient trader. The social media trader is very impatient. They don't want to wait here for a turnaround story, and they're selling first and asking questions later. And the analyst community comes in too. They're all lemmings. They all chase. They're all downgrading the stock here.
They were right on a downgrade. I mean, there is a lot of downgrades. See, this time.
They've been right.
Yep, they've been right on this one.
Yeah, I've been wrong. Yep. I admit when I'm wrong, folks. I've been wrong on the AMD story. If you're in the AMD story, I think, we're being proven wrong. So, you wish you could get them all right. This one, I've bet on Lisa Su. You bet on good people at reasonable valuations. AMD looks like that. But, man, you just can't get any business away from NVIDIA. And it's proven like, I thought AMD could eventually be a number 2. It looks like there's number 1, and that's it.
Dennis, quick question from the chat. Do you use stops?
What a fantastic question. No, I never have a physical stop in the market, but I have an idea of, because I'm a full-time trader, I have the luxury of being able to manage my positions without using stops. I get, some people have day jobs. They can't be at the market during the day. I can be there, so I can really manage it out. On my day trading, I absolutely, want immediate gratification on most of those trades. When I'm trading something off a headline, I want to be right away, because if it starts going the other way, I've probably got the story wrong. I've probably got the headline wrong. I've got the interpretation of the headline wrong. So I like immediate gratification on most of my stocks. Day trading, I give very, very little room to. Sometimes I get stopped out too early, and sometimes I get shook out. The long-term investing, I give them more room. I've given AMD a lot of room. I've been in AMD, folks, for like a year and a half here now. That. I took the stock from $93 all the way up to $227. I sold some stock at $180, which was a good sale, but I rebought at $140 and $130. And, that's why at this point in time, I'm back down in this trade. Like, maybe some of the money I took out of it made up for it, but, it's just round trip the whole damn thing. So, oops, I swore again. Mitch says he can't do that. The YouTube algo beats you, so we got to stop the cussing.
Tip jar. Can I just add one
you had a potty mouth today, Dennis. You had a potty mouth.
Oh, AMDs get killed. I'm getting killed here, and I'm mad.
One of the
that
things
doesn't mean you swear.
Okay, no more potty mouth. Mitch says he can't do that.
One of the things that brought me to pre-market prep was just the honesty that you guys have with your trades and so forth. When I hear about like, hey, I got this one wrong and this one didn't work out, this is real trading. And to me, when I was a listener rather than being on the panel right now, it was always refreshing to hear traders talk about, hey, I had an idea and this one didn't work out. And because they're not all going to work out, there's so many times that you hear on social media where nobody talks about a loser and how to handle it and so forth. And that's not trading. Those traders, I call them fugazi traders, because they're not real. Like, if you're just talking about winners and so forth, that's nice. And we applaud those too. And Dennis has made some great calls. Tesla, he had huge conviction, and it actually helped me to get involved in something like that. But it's also very refreshing to hear about, hey, I thought this was going to happen in this stock and it didn't work. So the market is full of different stocks, and we're all trading out there, and not every trade is going to work. It just doesn't work that way. And the best traders out there, like I think Jim Simmons, who's like by far was the best, has the best return as a hedge fund trader. Do you know what his percentage of winners is versus losers?
Like 51.
Yeah, so that means you're going to be wrong 49. So what are you going to do the 49% of the time that you're wrong, right? So you have to think about that in trading. And I love that you guys talk about, hey, this one didn't work out, and and what's the outlook from there. So I love that stuff. Thank you, guys.
Yeah, I'm wrong all the time. And, in the long-term portfolio, I've taken stocks and just got massacred, and I have some terrible ones in there too. Do you guys know it? If you've been following me for a while, I'm bag holding certain stocks. Intel, been bag holding with Joel here since for the last year.
I dumped it. I'm out.
Did you dump it?
Mm-hmm.
Good. Yeah. I mean, I've dumped most of it, but Pfizer I've been bag holding. I mean, AMD I'm turning into a bag holder, which just drives me nuts that I've turned this huge winner into this loser. Should have just stayed out of the story. I had some CI bag hold for a while too. Obviously, I made a lot in the first half of 2024, but really bad in the second half on it. I mean, but overall, I mean, the whole name of the game is controlling your losers, keeping those losses to a minimum, and trying to, run with the winners as long as you can. And, in the long run, that's really going to help you. The opposite happens for your typical retail trader. I'm not joking. We've seen it again and again, Joel. People, because Joel ran the Bright Trading office. I was in the Bright Trading office, Detroit. We see, typically you're getting prop traders from retail. So you see them come over. How many times, Joel, they come in, they're like, I don't get losers. I just don't take them. How many times do you interview a trader and they say that? No, what do you do with your losers? Oh, I just hold those. They come back eventually. That is how you lose your money in the long run. Because inevitably, when you, and write this down, for anything today, write this down, get your pen and paper ready here, folks. If you're trading and you've got, always taking your winners when you get up 1-2%, but always holding on to your losers, meaning, you never sell at a loss. Your rules are, I don't sell at a loss. Inevitably, there is a 100% probability, not 99.9, 100%, that eventually your portfolio will be full of losers. It has to be, because you never sell your losers. So even if you're 99% right all the time, there's going to be the 1% that comes in and you're holding that one. Well, that one's never coming back because I'm saying, in certain cases, some of them are not going to come back. You refuse to sell. So now some of your capital is tied up in that one. Then you get another one. Then some of your capital is tied up in this one. I've seen it again and again. You look at these people long-term portfolio and they have a bunch of crap in there. And it's because they refuse to sell at a loss. It's loss aversion, right from behavioral finance. They will not sell at a loss. If you are that trader, I'm talking to you right now, you inevitably will lose money in this game. Inevitably. It has to happen. So you have to cut the losers. Now, if you're buying SPY, QQQ, market goes up in the long run, maybe they bounce back. But I'm telling you, folks, if you're following that trader on Twitter and he has a 98% win rate and he never sells losers, I mean, in the long run, that strategy actually is flawed.
You want to hear a quick Eddie Franco story?
Yeah, Eddie was awesome. So Eddie, one of the founders of Bright Trading.
Yep. We had a trader really struggling. Came from an oldie desk, and I don't know if he was down to he was low. The account was low, and Eddie and I were with him in the elevator. And, Eddie's like, hey, you're struggling. Well, what do you think's going on? He said, the market isn't acting right. No, you're not acting right, is what Eddie said. Don't blame it on the market. When you are saying no, the market, that news came out. It took me out. Don't blame the market. And that was the Eddie Franco. Looks like Nabs Karad might know Eddie there. Just put a comment in. Let's talk burritos. CMG. I told you I did not like my meal over there the other day. They beat by a penny. Mixed report, missed on the sales. Margins were down. They had a dirty counter when I was in there. But CMG, buy the dip or not to buy the dip on this one?
Well, I thought that the chat had it right yesterday. I had asked yesterday, guys, what do you guys, have people been to Chipotle? What do you guys think? And it was very, very lukewarm in terms of the sentiment. Like nobody was saying, oh yeah, I love it. Everybody was like, yeah, I've been there, and I haven't been there in a couple months, or it's okay. It's a very good gauge. And they did miss on their their store sales numbers. So that makes it very difficult to buy the dip too. When you hear that they're not increasing, and they did lose their CEO to Starbucks. So I would rather stay with Starbucks. What do you guys think? It's not Mexican, but it's a winner right now.
Is CMG starting to be in the out crowd?
Yeah.
That's the issue here. It's starting to be in the out crowd. I mean, maybe not long. When you bring up that long term, you just don't even see the recent blip. But is it kind of in the out crowd now? Kind of getting there? Maybe. Valuation's always been high, and valuation is fine to be high as long as you're in the in crowd, aka Palantir. When you get in the out crowd, though, Valuation high is not a good thing. I don't know. It's like, I think it's guilty until proven innocent here. It's kind of lost its luster a little bit. Is Kava, the new sexy toy for retail traders on the street? Just talking, Kava's obviously, one that I don't know if I'd be investing in, but it's kind of the new toy, the new shiny toy over Chipotle. Is Kava hurting its performance to a certain extent? Maybe not fundamentally, but I see a lot of people in my social media feeds talking Kava. I don't see as many talking Chipotle anymore.
What about Brinker is the new star? Eat.
Oh my gosh. Holy. What's with that? What is with that?
Chili's,
yeah.
Chili's
Wow.
making a comeback. Yep.
Yeah, I mean, even Darden restaurants too, man. Like there is definitely, is this like a little bit of like they're in the sweet spot with Chili's, Olive Garden, where you have a lot of people, who have struggled here, we know, and maybe there's a little bit of a trade down, meaning I'm not going to go to the real fancy restaurant. I'm going to go to like Olive Garden or Chili's because I can go in there and still eat with the family for 50, 60 bucks. Is there that? And then also even the trade up because McDonald's and stuff has got so expensive. Like, well, I'm going to go fast food and spend $35, $40 in the family. Might as well go to Chili's and have a nice sit down meal for 55 or 60. Are they just in the sweet spot? DRI and eat.
All I know is CMG. I'll just give you a quick technical level on this. 55 is huge. 55 was your monthly low going back in October. And then you match that with a 55.30. You blip below it, man. Someone got really excited, knocked this thing down to 52.20. That was a little bit of a whoops trade. But then when cooler hills prevailed, you came down in the pre-market and you held 54.96. So 55, that's a must-hold level here for CMG. We have our guest coming up here in just a few minutes. We're going to talk REITs and hotels with Jay Kornreich over there at Wedbush Securities. Before we forget, someone asked about NVIDIA. Let's just do a quick technical on NVIDIA, and then we'll go to Mr. Kornreich here. What do you think? 2-day, 3-day rally, nice bounce? What you thinking, Christian?
I caught this one perfect. I bought NVIDIA at 113. The low was 113.01. So I bought more NVIDIA. I actually sold the Tesla I sold. I put straight into NVIDIA. I haven't really like designated that. It's kind of in there. It was in the long-term account, but I've got another position in NVIDIA too. So I was like, I had already had a position, so I like brought it up to like a full-size position. Do I lighten it back up into the rally? I think so. I think you can trade it a little bit here. I think, you're buying dips and selling rips, and I think you just had a ripper to sell here in NVIDIA. So I actually may lighten up the shares I just bought at 113 2 days ago. I mean, it's a pretty darn good move for 2-3 days. So, and here, obviously, it's up here again this morning. Not selling the whole long-term position, but the extra shares that I bought, I may just scalp out of those today. NVIDIA thoughts, Christian? I mean, you're getting a rip. It's just bounced off the lows.
Yeah. I kind of am moving NVIDIA to the back burner of like what I actively trade for now, because it just, I look at that top right chart that Joel has there, and it just hasn't come back since the DeepSeek thing. There's other stocks that have that I'm just paying more attention to. And when a stock doesn't act well, and if it doesn't rebound the way everything else is doing, I kind of just continue to move it further off my radar. It's not to say that I won't ever trade it again, but it's not on the top of my list anymore. It's not a go-to name for me the way that it's been acting. And I'll just kind of wait for something, a catalyst that maybe something comes up that'll get it back on my, priority list of names. But for now, I'm kind of just, it's moving off my screens a bit.
My final comment on this one is I'm looking at all these candles here since the DeepSeek thing, and you got one really important candle here, and that was the price action from Friday. You had a high of 127.85, a low of 119, and a close of 120.07. That's a big candle. That's a big bar. That day, it closed at 124.65. So how does the street deal with this big red candle here? Are they just rigging the register here from these couple days? because I just don't see it going back. That would be a big move. I mean, going opposite AMD today, which has been happening. But I think if I got an ultimate target in this today, it would be 124.65. But my creaky old bones say, don't know if it's getting there today.
Thanks for that call out, Travis, man, calling out NVIDIA. And there's a nice little analysis, but let's bring on our guests here, 8:35 guests, ladies and gentlemen. All right, there he is. There we are. Jay Kornreich. He is VP of Equity Research for REITs at Wedbush. Good morning, sir. How is your morning going?
Good morning. Doing great. Thanks so much for having me on.
We got a first timer, right?
This is it. The first time. So
this is it. Welcome. Good to have you.
Thank you.
All right. That means we're going to take it easy on you a little bit.
I don't know about that, Joel.
I'm ready for the tough shots. Let's go.
All right. Let's talk tariffs and inflation. And you're talking about the REITs and, of course, very interest rate sensitive. Let's just talk about the tariffs, which we don't know what they are or when they are, but we know they may be.
Yeah, absolutely. It's clearly a clear focus for us in the REITs that as we're trying to assess what's going to happen with tariffs and the read through of that into what it means for inflation and ultimately what the Fed's going to do with interest rates. The overall REIT industry is quite sensitive to the 10-year treasury rate. And so, in a simplistic standpoint, when the 10-year is going up as quickly as it has been, that's certainly a headwind for REITs. Should that revert, then that could be a tailwind. From our perspective, as long as we can get some type of stability in the 10-year, even if it's in the 4 to 4.5 range, we think ultimately that can be a good sign for REITs and increase external growth and acquisition activity. But certainly tariffs and interest rates is going to be a key focus for us.
All right, so you probably had one set up for the REITs in 2025 based on the consumer and that original thesis. Are you ready to need to adjust it on the fly here, or you were just talking about the tariffs? Who knows how that's going to work out? But talk about what your thesis was before the tariff talk.
Yeah, sure. So having a new administration come in, which was going to, naturally create some volatility with many new policies. Our initial thesis, which still stands today, is that, the beginning of 2025 could be a bit choppy as, we digest all of the new policies, tariffs, what it ultimately means for, a stable economy and rates going forward. As we, get more clarity on what that picture is, we think there could be a good setup for the REITs. Valuations overall scream fair, if not cheap. And it's really just about getting that clarity on what the economy is going to look like and more stability in the 10-year, which we think could come in the second half of the year.
Okay. And return to office. I mean, that's definitely a lot. You see a lot more mandates for that. That should be a positive catalyst.
Sure. Yeah. So, the more calls there are for return to office, from the bigger companies, the more other companies have to compete. And so naturally that should help overall office occupancy. It's, clearly going to be a city by city perspective on which cities are doing better. New York has been certainly ahead of the pack there. But, interestingly, also as it relates to hotel REITs, as more people are being asked to come into the office, that also lends itself to more in-person meetings, in-person travel. As we think about the business transient customer in hotel REITs, we see that leading to a potential upside in that demand segment.
Let's talk some specific stocks. Give us a couple picks here, Jay. I mean, in the sector, obviously, it's been, rates have obviously hit REITs quite a bit here in the last couple of years here. If we get some stabilization, TLT stops going down, long-term rates start going lower, probably does pick up. Do you have a couple stock picks that you think could benefit if rates actually do start to go lower?
Yeah, absolutely. I mean, just as you think about the overall hotel sector, which is the most volatile within the REIT industry, naturally just being that leases are typically 1 day at a time, the amount of time you stay at a hotel, versus if you think about office, like you just described, those could be 8 to 10-year leases. And so that leads to more volatility in the hotel REITs and more sensitivity around how investors think the economy is going to be performing. So if the 10 years going down and we overall feel it's a a healthy economy, we expect the overall hotel REIT sector to perform quite well. Our two outperformed picks in the sector, Ryman Hospitality, ticker RHP, more of a group-oriented customer base, so groups that can be 600 people on average, which typically books 1 to 3 years in advance. That gives you more cash flow transparency into what revenue and demand can look like. And then Host Hotels, ticker HST. It's the largest of the hotel REITs, best balance sheet at 2.5 times, very geographically diversified. And after $1.5 billion of acquisitions in 2024, we see that providing upside in 2025.
Question for you. So you also cover gaming REITs. Can you talk a little bit about that group as well? And then I have a follow-through question on that as well.
Yeah, sure. So in the gaming REIT sector, there used to be 3. Now there's 2 REITs, Vici and GLPI, and they house the casino operations of the MGMs, the Caesars. What's happened over the past 5-10 years is that the casino operators have sold off the real estate as a way to bring in new liquidity and ultimately reinvest or acquire new casino operations. And the gaming REITs such as Vici and GLPI, they're creating long-term triple net leases with the casino operators. And so all the expenses of the actual real estate are incumbent upon the casino operator, and there's fixed rent escalators typically around 2%. And these leases are anywhere from 20 to 50 years, so long-term leases.
All right, another interesting. Oh, I'm sorry, Christian, you had a follow there.
Yeah, so I don't know if you cover these as well, but do you also look at the healthcare REITs as well as like the data center REITs, which have been fairly hot, I guess, over the last couple of years, like Welltower, WELL, as well as like Prologis and that kind of thing. Those are they just completely different segments of REITs, or is that something that you also have a little bit of overlap with?
Yeah, so even though the REIT sector is all within the same industry by tax code, you really have to dive into each industry separately. So when we talk about hotels or gaming, as you reference, senior housing or industrial, each of those have its own fundamentals, natural demand and supply dynamics. I would just add in short, senior housing, which continues to get tailwinds from strong internal growth and with a strong cost of capital, external growth is also helping to really increase earnings there. So that remains a strong segment. Industrial we went into 2025 with I would say somewhat at a consensus call that we're outperform on that segment, expecting a stronger, more resilient economy, which will naturally lend itself into a stronger consumer and 3PLs and so forth, being more active and negotiating leases. So, a lot to certainly digest with the administration and getting the volatility to stabilize a bit, but we certainly see pockets within the REIT segment that could definitely be outperformers by year end.
Jay, how much is this, REIT underperformance also just a victim of like AI, where everybody's been in the sexy AI trade and they're like, I don't want to pick up 5% in a REIT right now. I'm going after 50% in NVIDIA. I mean, if that AI trade cools off, do people come back to the well? Because you think about like value investors have always, invested in REITs and stuff, but you don't hear anybody talking about them anymore because when you get a 5, like a GLPI has a 6.26% dividend, that looks pretty darn good. But in a market that was up 24% last year, 22% the year before, it's like people are like, I think people were selling these stocks to go and chase those winners. If the AI bubble cools off a little bit here, could REITs benefit?
Yeah, it's a great question. In terms of where capital is and dry powder that could further be invested, the REITs could definitely be a beneficiary of that if the AI momentum cools off. I would more so point to when we think about last year outside of AI, we had a very volatile 10-year, and as we talked about a moment ago, interest rates are really critical to at least have stability in them, so that buyers and sellers of real estate can be more clear in how to value the real estate and actually effectuate transactions. And that's really what's going to get the real estate sector going. And so if we can get the 10-year at least stable, if not declining, then I think that already becomes a real beneficiary of the REITs, and they can be an outperformer this year. And then to your point, if we can also take away some of the momentum from the AI trade and people look for other opportunities, the REITs are not just a dividend yield play as maybe they were 20 years ago. A dividend payout ratios are around 70% of AFFO, meaning that the REITs are really retaining capital to reinvest internally and also grow externally. And so with all those dynamics put together, stable tenure, some loss of the momentum in AI, the REITs could definitely be an outperformer and regain that previous momentum.
All right. Reiterate your top pick for the gaming REIT sector.
Sure. Top pick for the gaming REIT sector is GLPI. They focus on casino real estate outside of Las Vegas. So, Mississippi, New Jersey, and those casino cap rates typically come around 8% plus. And so healthy deal spreads as new acquisitions come online, in addition to a lot of visibility this year with the already committed $1 billion development in Chicago with Bally's, the first commercial casino in Chicago.
Top components in that index. Do you know that off the top of your hand?
I mean, in the game REITs, there's only really two REITs, GLPI and Vici.
But the components of GLPI, the top components.
So the top, the top tenants, is Penn National Gaming. That's really been their main tenant. They've been also working a lot with Bally's and expanding that relationship. They have smaller ones that can provide opportunities such as Cordish companies, but really Penn National Gaming and the growing Bally's relationship is their top tenant base. Okay.
Jay Kornreich, he's over there at Wedbush Securities covering the gaming REIT sector. Jay, fantastic having you on again. We will follow up again with you real soon. Jay Kornreich.
Thanks so much for having me on. Appreciate it.
Thanks, Jay.
Christian, you got a sneaky chart over there. You want to pop that up?
Oh, I'm not sharing the screen, but give me 2 seconds. We were just talking about, hold on, let me, multitasking here, share screen, window. All right, here we go. Yeah, kind of sneaky little move here. What's going on in TLT? We haven't really talked bonds that much recently, but you can kind of see that we've been kind of carving out this low here in TLT. We retested going back, where was this last about a month ago. Since then, we've been the trajectory has been up, and just looking at where this is. In terms of, this is not going to show, let me see if I want to bring up a weekly chart here. Bear with me, a little technical problems there. But good. Yeah, I mean, I'm watching this 87.97 level. So this is a new concept for you guys, but this is called the bullish 80% rule that I've got going on here, where as long as price stays above basically $88, it's triggering a little rule for me using my volume at price, looking at this year's value area. And ultimately what that 80% rule is, once we price establishes itself inside the value area for the year, which it's now trying to do, there's an 80% chance that we go from one end of this value area to the other, which is all the way up about 94. So I'm kind of thinking that this bond move is getting very interesting. And what moves well with bonds? What's the implications if bonds if rates go lower on the long end of the curve? There are some beneficiaries of that in the equity market.
Yeah, for sure. I mean, IWM, you think about right away. Small caps need lower rates. We've talked about that. So as TLT goes up, lower rates are out. It's obviously leading to lower rates. XBI is another one. Been very much underperforming. Rates have been holding it back. TLT's fall, definitely holding it back. Start to see life in the TLT. Start to think about biotechs. I mean, it's financing. It's their biggest expense is financing those next trials. Most of the companies in the XBI are small companies that are burning a lot of cash. And obviously, if the financing, gets cheaper, that's a huge beneficiary for them. So think about IWM's 2,000 stocks there, 150 stocks in the XBI. We've talked, lots about, other interest rate sensitive stocks as well. Not so much AI. So, I mean, if the TLT starts to show life, that's good for these companies. Now, the question is, why is the TLT showing life? Sometimes you got to dig in a little bit deeper and say, okay, is it Fed speak? or is it political uncertainty? And when you get political uncertainty, meaning like we don't know where, like even comments like we're taking over the Gaza Strip. I mean, people are like, I don't know what that means. I'm putting my money into some treasuries because I'm a little bit concerned about safety. So sometimes you got to understand why the TLT is moving higher. This is where technicals don't give you the why. I think lately we've got a little more geopolitical risk than we did before with, economic tariff wars here, commentary that's coming from everywhere. We can say, it's Fed speak driving the bus here, but it's Trump speak driving the bus more than anything right now. So just keep that in mind. Sometimes the why matters, and sometimes bonds are just simply a safety trade.
Yeah, and it's too. I'll add a couple things in here. First of all, I know when we just had Jay Powell last week, who and we had a Fed meeting last week. When they talk about interest rates, they're talking about the short end of the curve. TLT has nothing to do with what the Fed is doing. The TLT is the long. This is around 20-year bonds, right? So the Fed does not touch that at all. They touch the overnight rate, the shortest end. So you have to always separate that because folks get confused when we talk about TLT, long-term rates. The Fed is not doing anything with those interest rates. The other thing is too, we're also. Dennis brings up a good point about uncertainty, and sometimes there is a flight to safety that's happening there. The other thing that's been going on too is Trump and team, not to get political, but they are talking about going after some of these areas, and they're cutting spend, and they're going after government spending, and that's also been a reason too why rates have been going higher. When you have higher deficits and so forth, and you need more and more bond auctions and more supply to come onto the market, that's also leaving a damper on what bond prices are doing. But when you start to cut government spending and maybe the possibility of lowering your deficit, then bonds can go back to more natural demand and supply mechanics. So I think that's what's going on there as well. So you have a combination of forces.
All right, let's go Ubering here. Uber. Boy, that chart had a rally into the report, giving it all back. Uber sales beat 12 billion versus 11.77. Not seeing the number here. Gross bookings 17 to 21% growth. Not looking too bad. Needham's still sticking with it. Really edged by on a $90 price target. Triple D, Waymo says coming to Uber, launching in Austin, Texas, and Georgia. What did they like about this report?
The report was fine, Joel. Again, this is just a fact of like the in crowd and the out crowd, I think. And Uber is all of a sudden on the out crowd. Tesla put it on the out crowd. We predicted that, back when the stock was trading $80. We're like, if you've got competition coming. And I think it is. I think the market is seeing in there. Sure, they're going to team up with Waymo. Maybe they're going to team up with Tesla here. But competition for them is coming. The reason they're teaming up with Waymo isn't because, they're teaming up with Waymo because they know where this is going. If they don't team up with the driverless, ride shares, they're going to be on the outs because they're not going to be able to do it on their own. So they want to team up here, and that's smart. Uber's very smart. I mean, they start to figure it out. I really worry about Lyft because Lyft, who's going to be teaming up with Lyft here? I'm not sure if anyone's going to be teaming up with Lyft. So they feel like they're on the outs. I think Uber's going to be okay. Would I invest in Uber here? No, because I think there's just so much competition coming for this business. I mean, the day Tesla solves FSD, and this isn't a Tesla conversation, but Tesla's definitely the reason that Uber is down. If they actually get their robotaxi on the road, I mean, there's so many just drivers coming from anywhere. And is Musk going to team up with Uber? Maybe Tesla does, but we know Musk likes to drive his own, ship too, fly his own, spaceships. I mean, I wouldn't be surprised they just come up with their own app. And that would just be a killer for Uber. So, I mean, there's lots of risks here with the Uber bullish thesis. Now, short term, they're still making pretty good money. Valuation is not crazy. I mean, you can't look at the 272. So the $3.21 because that had a one-time. That just had a lot of one-time items in there. So it's not comparing apples to apples and saying, oh my gosh, they made $3. I extrapolate that they make $15. It's one time. So 66 cents was the number, but then when you do the adjustments, it wasn't that big of a beat. But I mean, this is just a matter of who's in and who's out, and I think Uber's kind of on the outs right now.
Technically speaking, you had a nice rally from just under 60 to up to 70. You're pulling back at this area. You also have a couple daily lows, 63.5, 64. If this thing's going to rally, if the bulls are going to come and defend this stock after the pullback, they're going to do it at this area. If not, you might get a test of that $60 level. But important day here for the bulls. Pre-market low was in that area at $64. Currently a $1.62 above it.
Earnings parade all over the place here. I mean, we can go anywhere. We've covered the main ones. Yes, we did cover Google off the bat and AMD off the bat. But there's Match. Amgen reported. I mean, where do you want to go, Christian? You got one you want to cover?
A House of Mouse, I guess. I mean, Disney's
I
a big
think
company,
so.
you know, and I want to hear again. You were there, what, 2 months ago?
Yeah.
Can you tell us again as we're looking at the price action? Did you like it, or did you? I know we've also talked about the streaming service, and you prefer Amazon, which I think is a really good point. I've now started watching shows on Amazon because of you, by the way. So thank you for that, because you told me. But tell us again about your experience in Disney. Thumbs up or thumbs down?
Thumbs okay. You know, there was you can definitely feel some cost cutting in there, where it's not as magical as it once was being at the parks. They're doing some things right, though. They're doing some things maybe not so right. I mean, we have these, like, when they get the new rides, the new Splash Mountain was, open, and you've got to, go on your app because you've got to get in the virtual queue to get in there. Well, the virtual queue on the ride, I was trying to get in the afternoon, and went on sale. You got to get the app, and you go in there, and it's noon. You go in the virtual queue. You want to know how fast the virtual queue went? I was right there at noon, pressing refresh. I hit refresh, shut out. Can't ride that ride today. 3 seconds. It went in 3 seconds, the virtual queue. So, I mean, it's pretty cool that you can just go. The virtual queue's idea is you don't have to wait in a 4-hour line for the ride. But, I mean, the alternative is you don't get to ride the ride at all. And that's what happened to us. So, I mean, it's smart. The people who are in the virtual queue can just go up, and they're only going to wait in a 20-minute line. But there's certain people who are getting shut out. So, I mean, they're trying different things. They're trying to do stuff. I mean, overall, I would say it was still a good experience. Disney does things so right, so many things right. But you could tell there was a few little things where maybe there's some cost cutting involved. The bigger issue for Disney that I think they have is the streaming numbers, which, were very predictable. So streaming revenue was up because they raised the price 30%, so it was definitely up, but they lost 700,000 subscribers. Why did they lose 700,000 subscribers? People are going to ask that. Obvious guy will tell you they raised the price 30%. I was one of those 700,000 who cut it. I've said for a while, I thought Netflix and Disney Plus could be a 1-2. Disney Plus is not going to be a number 2. It's going to be Amazon. It's going to be Amazon. They have way better shows. Disney Plus is not really focused. And again, in the valuation of Disney, there isn't much Disney Plus left. So it's not like they're going to really move off streaming anymore. They just can't figure it out. They've honestly done a very poor job of, customer retention in Disney Plus because there's just no new content. I've said this before. You log in the first time, lots of fun things to watch. Then you watch it all, and then that's it. They don't have a lot of new content coming. I mean, Netflix always pounding out new content, does everything right. Amazon Prime, killing it, man. I watch the Prime. There's lots of good shows on there, lots of cool stuff to watch. So, I mean, there's 1 and 2. Disney Plus is on the outs. So what does that mean? I don't know what it means. I mean, if we get into an economic slowdown, it's really bad for Disney, though. But I'm not surprised it's starting to leak the gains back here. What's the story here? What's the driver? I don't know if there is one.
So you mentioned that on the pre-market show about, I wonder if Disney's going to be able to hold on to those gains. You had to be quick. Went up to over 118, 118.20. Wow, that coincides just shy of the recent high of the move at 118.63. We're not going to. I doubt we're going to see that today unless we get one hell of a rally. But for right now, this 114.60 to 115 area, matching highs at 114.60 and 66. Your 4-day high 115. That's major resistance coming back on the downside. They did take it down into the 110 handle, 110.5. That also coincides with your low on, we'll say Wednesday, your low on Monday at 110.86. So there's some good parameters for Disney. Boy, we gotta go this quick. Someone wanted a preview Qualcomm earnings, but let's talk not the apple of your eye here. Apple traded down almost $5. Boy, this thing is volatile off a China probe. Dennis, I know you're not a big fan of this one, but down $5. That's a big move for Apple.
I don't know. It's still this range. Christian, home on the range. I mean, that was the name of the title. We're still kind of in the home on the range here too. 220 support,
Groundhog Day.
245 resistance. What do you think, Christian?
I think that this stock is also gone unloved, and we were talking about this. We were talking about this before we came on about stocks that are being loved right now and stocks that are not loved, and that's why I asked about Disney. I haven't traded Disney in a long time, and I'm always looking for things to kind of change. Like I want to be ready for changes that we see in the marketplace. We talked about it with AMD. It was like, okay, let's see if this stock can change. Nope. Disney was up pre-market. Like I heard excitement from like Bloomberg this morning when they were rattling off the numbers. And I'm like, geez, can Disney actually could that be a new stock to watch? We've kind of seen it with Starbucks. So I'm like, okay, Starbucks is interesting me now because they've turned the corner. But to your point, like Disney went up and it's not following through and sellers are overwhelming the stock and it's not holding on to it. So some roundabout answer to get to Apple, but Apple was up in the early session in the early part of the day on, I guess that was Friday when they reported earnings, and they sold off. And again, I don't know if they've got a catalyst for me to say, hey, to get really excited about Apple. So I think Apple is going to stay in that corner of, hey, if there's uncertainty, if there's negative headlines, and if the market is feeling uncertain, Apple might outperform in that environment. Until then, I don't need to really trade Apple either.
Yeah, range bound, 220 support. It gets down there again. You probably take a shot again because it probably bounces off it again. ARM Holdings, before we end the show, this is the stock that's going to matter tonight. We can talk Qualcomm or MSTR or Ford. No, it's ARM. ARM is going to matter because it's going to give us a glimpse into NVIDIA. So I think it's very important, the ARM Holdings, for the NVIDIA case as well here. ARM obviously trading slightly higher in the pre-market. It's running up into the report. Man, the run-ups into the report are working really good here. Again, we talk about that core strategy working really well. But I mean, ARM's going to report here tonight. Let's see what they say because it'll give us a glimpse into Disney here or into NVIDIA here. It's very important for the AI story here that ARM doesn't disappoint.
Kind of wishy-washy here on the numbers. It's probably not with the expected move is probably more than I'm looking, but 170, if you see that, and then things wide open after 170. If you're looking for a pair of lows in the same area, wow, that's down at 143. So kind of wishy chart. Anything sticking out to you, Christian, before we wrap things up?
I think Christian had to go. He's hopped.
Christian had to go. Okay. Tomorrow's Thursday. We'll be bringing Jim Tassoni on, see if his perspectives on the markets have changed at all. Down but not out here. Google's dragging us down, but the S&P's still showing a bid. We're wrapping things up on this wacky Wednesday pre-market prep. Thanks for joining us.
If I'm buying any stock on the dip before you go, it's Amazon. Again, Amazon reports tomorrow night. I think they're going to kill it. I just think Amazon is just doing everything right. It honestly, if it's not like at the biggest position in my long-term portfolio, it's pretty close, but I just want to continue to add to Amazon. I mean, the stock is just firing on all cylinders. You think about whenever they get into anything, they seem to eventually do it the best. I mean, they weren't even on the radar for streaming 5 years ago, Joel, 3 years ago, 2 years ago. And now I find myself going on to Amazon Prime more than Netflix. They're not at Netflix, but I find myself going there. And I mean, they just seem to do everything right. Obviously, they took over the retail sector, but, from cloud services to now streaming, it's like if Amazon gets in there, man, they do it right. Is there a better run company than Amazon?
Is
Is there?
there? Isn't it that picture like in a sporting events? Isn't it a little bit fuzzy?
In sports?
Yeah, the resolution in Amazon, or is that just my old eyes?
Oh, I think they're doing a great job. They got the Monday night hockey. They got football coming. I mean, they're getting into that
I mean,
too.
but is it the same picture? Is it the same resolution? Folks, kind of help
Yeah,
me
yeah,
out
it's
here.
the same. It looks fantastic. It's your
Help me
shitty
out,
internet.
Brett
Oh, I
String.
can't say that word. Oh no, I'm gonna.
Ooh,
YouTube's
What
killing me.
did you say?
I wonder.
A
He
crappy
said a
internet.
bad word. There you go.
Oh, that's a good word for you today.
I don't
That's what I
disagree,
know.
Joel. I will say I don't disagree with you about the quality of the picture, but I don't necessarily agree with you. It could just be like a streaming thing. Maybe you're just having
It
like an
is.
issue with your Wi-Fi or something like that. I don't know. Who knows? Dennis, that was a great little discussion to just throw in at the end of the show. By the
I
way,
just
thanks for
wanted
doing that.
because we're down here on Amazon today. It's down on Google. It's down. Trading off of sympathy here. I think if any stock gets the dip bought here today, I think it's Amazon. I I hate buying stocks near 52-week highs, but originally I bought my Amazon, my wife's portfolio at 107. I bought more for myself at 160 and 180. I'm like, it's hard buying at 238 because it's run here, but I mean, holy mackerels, this is such a great company. You don't own this company, you're missing so much, man.
Maybe we start doing like a last minute Dennis throw in his favorite absolute buy or sell call of the day. That could be a fun little feature.
I don't know. The day trading's hard because you sometimes don't even know because the news changed suddenly. But the longer term investing here, good companies, reasonable valuations. Man, Amazon valuation's got a lot more reasonable than it has been in years, and what a great company. SMCI news. They're saying.
All right, hold on. News me.
Here we go.
I don't know. I just saw that's what was
It's
saying.
good news.
Travis is saying in the chat. Did they come out with news?
I'm looking right now, Dennis. Let's see.
It's good news.
I don't
Full
see
production of NVIDIA Blackwell rack scale solutions with NVIDIA HGX B200. It's not the news.
No,
it's not the news we're waiting for, though. We want to know what BDO knows. BDO knows. That's what we're waiting for. But popping up on that. Thanks, Travis.
Next daily high 30.76. If you're looking for a target, just ticked over 30. And in an ode to Christian, the 50-day moving average at 33.53. It's rattling the S&P as well. We're ending the show for today, folks. Thanks for joining us on PreMarket Prep.